Welcome to the Transparent FX Academy. In this video, I'll speak about USDJPY. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical monthly demand and support area. From here, all these previous rejections to the upside were created, so every time the market was testing this zone, it was rejecting it to the upside quite aggressively. And what we can see is that we just had yet another test of the exact same zone, already the start of our rejection to the upside. So in a situation like this, more bullish price action could be expected away from this area, as already happened in the past when the market was testing the exact same zone. Now, these rejections to the upside are very aggressive, so there is strong institutional buying happening at this level. And we will be speaking about this institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market here is rejecting the strong demand and support zone fueled by strong institutional buying. And let's drop down on the weekly time frame. Now, from a weekly perspective, the situation is very clear. We can notice a perfect structure level being created at this zone. This area was acting as previous weekly support with this rejection to the upside. Then the market broke below the zone and the previous support was turned resistance here and again resistance here. Then the market with this impulse to the upside broke above the level. So all this previous resistance was turned again support at this zone. And the market is currently in the process of testing this level and it is currently starting to reject the zone to the upside. So what we could expect here is a potential completion of this weekly impulse correction and impulse pattern to the upside, because keep in mind that if we have an impulse and we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can notice how the market has already retraced to the zone that is essentially lined up the best with this structure, which is the 50% Fibonacci retracement, which is in perfect confluence with this horizontal structure level that we have already identified. And when there is confluence of support, there is an increased probability of seeing institutional buying, further increasing the probabilities of a potential rejection to the upside away from this level. Now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, we can see already a double bottom being created at this zone, which means that there is definitely the possibility of seeing the market at this level start to form an accumulation zone. And after institutions have finished loading up their longs, the market could reject higher. Speaking about institutional buying, if we're going to see what we have when it comes to the commitment of traders, so what the big players in the market are doing, if we look at the data for the JPY, the first thing that we have to keep in mind is that we are already looking at JPY USD, because all currencies on the spot are traded against the USD. So if we want information on USDJPY, we simply have to reverse everything. So if institutions are shorting JPY USD, they are longing USDJPY. It's that simple. And that is exactly what is happening. We see 5,300 shorts added on JPY USD with the last report and 1,800 shorts getting closed. So institutions are shorting JPY USD, so longing USD JPY, decreasing their net positions from the high here at 179K all the way down to 82K, therefore making USDJPY much stronger. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description so you never miss new updates. Now back to the analysis. So in a situation like this, if institutions will continue to add longs inside of this area and this will become an accumulation zone, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data. Those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a rejection higher away from the zone fueled by that institutional longing. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integration, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.